I'm Corbett Wall with DV Auction, here with your feeder flash for Friday, April the 20th, where a lot of people are betting on this cattle market, and the over and under is 91. That is the placement percentage that has been pegged by the average of the analysts that predict the cattle on feed report. It's all about the placements. If they're off on the placements, of course, that's going to reflect on your cattle on feed inventory. They've got the inventory as of April the 1st estimated at 107.6. Everybody else is thinking about that too, pretty close, but your placement figure has got a little bit of wiggle room in there. We know in March that there were a lot less cattle moving than we have seen here the other months so far this year, but it's compared to the same month a year ago. And so we know how dry it was, the wheat had played out, there wasn't a lot of cattle moving, and we were expecting lighter placements for the first time in a long time. The heck of it is, we've got that placement figure all the way down there to 90.9 or 91. If it should come in lighter than that, it could be a very bullish signal for your feeder cattle, for your out front fat cattle sales. If it comes in much higher than that, it could be more bearish figures and kind of take away this little rally we've seen here the last couple of weeks. If you look at something fundamental, which is your nationwide auction receipts through those weeks in March, it's sitting right at 91%. So that doesn't help us get on either side of that, and we'll see what happens with that. The kind of way it's been looking and the way I expect it is there's more cattle in the world now than there was a year ago. So yeah, I think you probably need to dial that up a little bit, and if I was going to throw a figure out there, which I'm not, I would probably say it's going to be in that 92, 93 range, which that I think that'd be close enough. It wouldn't throw a wrench in this rally we've got going, but you know, it'd sure be nice if that average of the analyst guess would get up there a little bit higher than that. I know they're trying to nail it, but it's sure hard to beat, you know, when you got a report we've been expecting to be kind of bullish, when they come in there with an expectation like that that's hard to reach, and a lot of times it ends up being bearish. But marketings for the month of March, they've got pegged at 96%, so we'll see on Friday here what ends up with that cattle on feed report. But you look on Thursday, your board and your cash markets were going in opposite directions. We're selling fat cattle to as much as $4 higher in the country, and your board is tanking. And you're thinking, you know, what gives? You know, why is it doing that? That just goes to show you how little your fundamental activities have to do with the cattle market. Your cattle market is a commodity futures market that a lot of these fund managers have found very easy to manipulate. There's not a lot of play in it compared to a lot of the other openly traded markets, and they can just get in there and drive it about anywhere that they want to take it. And you know, your problem is you have no long hedgers. When they started these commodity futures, the way it was supposed to work is you were able to lay off risk for marketing that you were going to have to do in the future. So if you were a cattle feeder and you knew that in 4 months down the road you were going to have cattle to sell, you were long the cash market and you were going to have to be short on going into 4 months, you were going to have to sell those, then you could take a short position, offset your risk for the sale that you knew you were going to have to take. Well, you would think on the other side that there would be packers that they're always needing cattle. They know they're going to need cattle in 4 months, and they would go out there and buy the futures market to offset their risk on what they were going to have to buy, and it would balance out like that. Well, what's happened in the last 40 years is these major packers have totally monopolized the industry. They completely control it. They have almost 80% of their needs, their purchase needs, already tied up, and then to boot, they get to price that 80% off that little 20% around their sliver that they can manipulate and push one way or the other with under the table money or whatever they need to do with a lot of contracts. That's another way they can tie more cattle up. You got people going in there and contracting cattle for 2 weeks out because they're afraid the market might be lower, and then like it has been the last couple of weeks here, you got people that contracted cattle less than a month ago for 114 and the market's 122. But that's what we're looking at, and that's how you can see this thing going one way in the cash market, the other way in the futures, even on your spot contracts. But look at the board on June live cattle down 227 to end the day at 103 even. April down $1.17. We're in the back end of April. It's down $1.17. Your cash market was $2 to $4 higher, and your quote at the end of the day on Thursdays 117.80 when they're given 122 for fat cattle in Kansas and parts of Texas. You know, but they don't have to worry because the board is under what the cash market is. You don't have anybody that's going to demand delivery. If it's like it was supposed to be whenever they invented this, you would have packers that would have bought that board out front, and they would say, 117.80, I'd like to buy some cattle at 117.80. I demand delivery. And all the guys that had the short positions would have to come with some cattle. That's the way it should balance out. But that's not the way it works. May feeder cattle down 2 1/4 to end the day at 138.42. April down 152 at 137.22. Like I said, your fat cattle market was higher in the country on Thursday. Through Wednesday, they had sold a little deal here and a little deal there, and it had added up to 14,600 head in your 5-area feeding region. Your weighted on your live sales on that little dab of cattle through Wednesday was around 121 on a live basis and around 186 on a dress basis, and that dress trade was pretty soft there because they had sold a pretty good slug of cattle off the market. But they come in on Thursday morning, start buying cattle in Texas at 121. It quickly moved to 122. In Kansas, mostly all at 122. In Texas, that would be $3 to $4 higher. Kansas, $2 to $4 higher. But mostly the 2 higher because they did get 120 for the late sales in Kansas. But you look at how that stopped when the board started going down, you know, triple digits there. We would have liked to have seen that trade spread onto the northern plains and, you know, maybe see them get 124, something like that. But when the board was so such a hindrance and no help at all to the market there, the trade just kind of stopped after they got the southern plains bought where they had offered at 121, 122. But there was some 192 on Thursday morning in the northern plains, and we think that would have been even better if we could have continued trade had the board not kept things from moving. Look at your slaughter's been pretty aggressive this week. 470,000 compared to 475 last week, and we were going along good last week, if you remember, until we got to Saturday, and then the snowstorms stopped it, so we didn't have a good Saturday, so the week's kill was light. But that 470,000 this week is 13,000 more than the same week a year ago. You look at your feeder market, your real-time index on Beef Market Central, late in the day on Thursday, sitting at 136.12. That was down 82 cents, so a little bit of the edge coming off some of those 8-weight cattle, but not in Pratt, Kansas. They had 5,000 head there and a good sale. And I noticed on the data that come in on Cattle Market Central, it was just load after load after load after load, and a lot of cattle merchandise the way buyers want to buy them in load lots. And their feeder steers there sold $2 to $6 higher. Feeder heifers firm to $3 higher. At Farmers and Ranchers Livestock in Salina, Kansas, on the north end of Kansas in the central portion there, around 3,600 head there. You know, didn't have anything from Market News come out, but that automated report on Cattle Market Central showed that things were softer on your feeding weights there. It was $2 to $5 lower, and that full decline was noticed mostly on 7-weight steers and heifers. But included in that grouping of steers there on that automated report, you see 559 head of steers weighed 858 pounds at 130.05 on the weighted average, and then that was a couple dollars off of last week. But had some good sales going on. I had over 2,000 head in Valentine, Nebraska. Matt Lowry sent me a message there and said sun was shining there and the market was good. Showed me some unweaned steer calves. A lot of them weighed 539 pounds, bring 199 unweaned. Paris Stockyards in Paris, Kentucky sold 59 head of 825 pound steers, 140.80. That's your feeder flash for Friday.